I personally think that there are a lot of people coming out, people that are not involved in gold, calling tops, and I think actually that's pretty bullish. But
Mm,
yeah, I mean, unless you trade gold, I don't think you should be concerned if you're buying gold for the long haul. Yeah, just use it as an opportunity to buy more dollar cost average. And I saw there was a headline, I think, or the cover of Barron's has a pile of gold on it, and it says "Gold Rush," and people are saying, "Oh, that's really bad. It's contrarian." But if you look at the little what they say here on the front page, it says below "Gold Rush," it says investors are loading up on the metal as a haven in chaotic times. How long can it last? The reason why I'm looking at that is because it's gonna make the rest of the world even more determined to try to hedge itself and try to have another, let's say, avenue to trade, i.e., use gold as the base asset and then trade amongst each other through their own currencies.
Gold's recent pullback has been primarily attributed to easing trade tensions between the US and its global partners, which has temporarily diminished its role as a safe haven asset. Meanwhile, a strengthening US dollar has added further pressure. However, broader geopolitical shifts are still in play. In reaction to US tariff strategies, over 50 countries actively explore alternatives to the US dollar for international trade. The BRICS nations have officially moved away from the dollar in trade settlements, advancing efforts to create a unified currency to lessen global dollar dependency. The World Bank projects that, despite near-term fluctuations, gold prices will set new all-time highs in 2025, before stabilizing into 2026. Regarding these developments, Mario Innecco emphasizes that the evolving global economic landscape is prompting nations to hedge against the dollar and seek new trade pathways. He advises investors, batten down the hatches, hold on to your gold and silver, and stay agile, especially if you're heavily invested in equities. Reflecting on gold's recent price action, surging to nearly $3,500 before retreating to around $3,319, Innecco points out that the metal ended the week down just $8. That's a healthy breather, he said, viewing the dip as part of a broader bullish trend. He also interprets growing skepticism from non-gold investors as a contrarian signal supporting a long-term uptrend. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads.
The reason why I'm looking at that is because it's gonna make the rest of the world even more determined to try to hedge itself and try to have another, let's say, avenue to trade, i.e., use gold as the base asset and then trade amongst each other through their own currencies, and that's de-dollarization. So that's what I'll be. I think people should be watching, and I also think the stock market. You said to me before we started, we're nowhere close to getting back to positive momentum in the stock market. So I would just batten down the hatches, hold on to your gold and silver, and be nimble if you have a lot of stock market investments. Gold has run up a lot. 2 weeks ago, gold settled at 33, I think 27, the spot price. Last week, yeah, we had a big correction. We reached 3,500, and then we corrected back down, and we closed at 33.19. So it's actually down only about $8 on the week. So it looks like it's taken a breather, but I personally think there are a lot of people coming out, people that are not involved in gold, calling tops, and I think actually that's pretty bullish. But
mm,
yeah, I mean, unless you trade gold, I don't think you should be concerned if you're buying gold for the long haul. Yeah, just use it as an opportunity to buy more dollar cost average. And I saw there was a headline, I think, or the cover of Barron's has a pile of gold on it, and it says gold rush, and people are saying, oh, that's really bad, it's contrarian. But if you look at the little what they say here on the front page, it says below gold rush, it says investors are loading up on the metal as a haven in chaotic times. How long can it last? And I think, yeah, Michael Oliver as well, he read the article, and they're actually pushing for gold. They're saying that it's not a good place to be. So they're actually not contrarian. So that's how I see it. And I like to look as well, Danny, at the monthly chart. If you could bring it up, there's still a lot of room
Right.
up on that chart. And I've looked at this chart, taking the high from 1980 to the high in 2011. And last year, that line was coming around 2,700. So we've broken out of that. So yes, all I would tell people is that hold on to the bull. It's just like in a rodeo, the bull is really wild. You have to hold on to it. It can't fall off the bull. And I think that's how I see the gold market. Well, a lot of people expected back in 2022 when the Fed started raising rates, or 2021. Don't remember exactly when, that as interest rates went up and yields went up, that gold would crash. But if you look at back in the 70s, we had rising yields, and gold and silver went up. So I think, yeah, this is a sign of stagflation, even though I think the Fed this time around will probably use yield curve control to keep yields lower, because the debt is so massive. It's much bigger than in the 70s. The national debt in the 70s was like 35% of GDP. Now it's more like 135%. Some people think that one of the reasons why this ratio is so high is because central banks buy more gold than silver. The public, I guess, isn't really involved in the precious metals yet. Maybe a little bit in silver, but it won't make much of a dent. But I saw that the silver deficit now, I think it's been running for 4 years. Annually, it's the size of a Olympic-sized swimming pool. So I don't know. I mean, I'm still bullish silver. Historically, bull markets in gold are usually followed by silver, but this time around, it looks like gold is going on its own. But I still expect silver to catch up with gold. And I don't think I could be wrong, but it's all about probabilities, I guess, in markets. I think we're not going to go that much higher than 100, even though I've seen people like Luke, and that's why I have both gold and silver, and I try not to sell one for the other. I just try to get out of fiat currencies.
Last week, the gold and silver markets experienced heightened volatility, with sharp price swings sparking renewed debate over the future of precious metals. Gold briefly surged to an intraday high of $3,500 an ounce, positioning it for an impressive 11% monthly gain, its strongest performance since November 2011. However, the rally was short-lived, as the momentum quickly faded. The key questions now are: has gold reached its peak? And is the current market calm a sign of fading uncertainty, or just a pause before more turbulence? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.